I can't beat you in terms of investment return. Whatever you focus your time and effort on, historically, that is going to give you the highest return.
Welcome, investor, to another episode of the Passive Income Adventures. This conversation we had today with Edmund Chien is going to be one of the deepest conversations that we've had so far on how to achieve the lifestyle of your dream, with a lot of really actionable nuts and bolts on both commercial real estate investing and stock investing. Edmund is a former stockbroker and real estate investor. His wife is still an active stockbroker, and they have really been able to build basically a family office. If you know what that is, it's a wealthy family that has a team of investors that invest on their behalf because they want to be able to have generational wealth to bless their children and their grandchildren, and they can benefit off of the investing that they have done early in their lives. They didn't start out from money. They started out like a lot of us, just in a simple middle class household where good is the enemy of great. And he has really put himself out there and stretched and grown to achieve a level of financial freedom that most of us really only dream about. And the thing that is really interesting about Edmund's journey is where he is right now, where he is just really enjoying giving back. There's no retirement on a beach, and that's not really what we talk about on this show. We really talk to people like you who are high income, high level professionals and entrepreneurs who probably wouldn't be able to slow down even to the point where if we wanted to or we needed to, it would be difficult for us to do that. And so Edmund's journey from the same type of personality is it was really fascinating how he's been able to allocate not only his finances but also his time to be able to give back and serve others without getting in over his head, balancing that retirement, that relaxation with his need to be active and also his need to help other people. So it helps us think about what life looks like after we reach financial freedom, how we're going to spend our time so that we don't get surprised when we cross that threshold and we finally feel like, okay, I can quit my job or sell my business or whatever it is. And then wondering, what am I going to do next? And spinning our wheels for a while because we've lost that sense of purpose. So Edmund's story really helped to fill me up with purpose. And I know that listening to more people who are on this track, especially those who are ahead of us and they can warn us about the things that are coming, was really beneficial to me. And I know it'll be beneficial to you. We are live with Edmund Chen. Edmund, how do you pronounce your last name? I took French in high school growing up, and I always want to say it's like Chien, like a dog.
Yeah, no, I pronounce it Chen, and I don't know if you knew this or not, but that my last name, that the Chinese character of our last name is actually money. It's the same character as money.
It's like, what do you call that? A prophecy.
No, it's a vocational last name. So it's like Schumacher or shoemaker and baker, cook, blacksmith. They're all vocational last names. So our last name is a vocational last name. So my ancestors were
Well,
financial professionals.
financial professionals, but then if you just want to look at it in money and be like, hey, you know what? It's I'm just going with prophecy.
Yeah, absolutely.
That's funny. I didn't know that. I feel like every time I see your last name, I'm like, I don't want to say it out loud because I'm always afraid I'm going to say it wrong. So Edmund's with us today from Toronto, out in the woods, surrounded by bears. Can you give us a little bit of an intro of yourself, where you came from, a little bit about your financial history, your passive income adventures that you've already had, and just catch us up to the present day and how you ended up in the forest with bears?
Yeah. So I appreciate you reaching out, and it's a pleasure to be here. I would say it's very similar to what I've encountered with a lot of people that are starting their journey into real estate investments. So for me, I'm born and raised in Toronto. For those of the people that don't know, Toronto is the center hub where most of the wealth in the country, or most of the wealth in Canada, is managed, kind of like New York City. But I didn't start out in finance. I started out with an arts background, and I spent some time in the military while I was in school or while I was in university. So while I was doing that, I really wanted to learn a little bit more about investing. And it started out as a hobby for me. And like many people, I started out and I came across Rich Dad Poor Dad, and we call it the Purple Bible. Everybody calls it the Purple Bible. So here I am reading it, and I joke around with people and I say that, well, what Robert says in that book is that real estate is so easy to do that any idiot can do it. And I tell people, well, I looked in the mirror and I saw an idiot. So I decided, well, I guess this is going to be my thing. So I started reading that book a little bit more deeper, and I just kept digging deeper and deeper and going further into it. And I ended up attending a real estate conference or a real estate program teaching us how to do real estate investing. And it was a weekend conference, like a lot of people are going into these programs. And I remember being very reluctant and hesitant. And the next piece that was coming was mentorship. like how to be mentored. You can buy their mentorship program. And I decided, and I was really debating whether I wanted to do it or not. And I was looking at properties, almost bought some foreclosures in Detroit. I was all over the place. And it's like, and I was really, really reluctant to pull the trigger. And I just so happened to come across or discover a group of investors that had been investing in Texas real estate for about a decade. And so it was kind of like a very large investment club at the time, and they wanted to become like a private equity firm. So I kind of knocked on their door and tried to introduce myself and wanted to learn a little bit from them first before I did it myself. And they said, you need to kind of have to be an accredited investor to come and work with us, or to be one of our investors, and you need like $3,000 in fees just to talk to us. And I said, well, I can't afford that. So then I discovered, it's like, well, what happens if I start working for you instead? I was like, oh, well, we're looking for employees. Like, you want to go? So they started me out on the phones, and here I was, and I realized, you know what? If I pay attention to what's going on around me and I just keep asking a lot of questions, it's the same thing. And not only am I doing it for, like, I don't have to pay the $3,000, they will also start paying me to do that. And they said, well, if you're good and you know what you're doing, like, we'll grow the company underneath you. And they sure kept to their word. And I just absorbed as much information as I could from them, because I thought it was like free mentorship, and I got a mentor and they were training me, and it really took. And next thing you know, 10 years later, I'm managing a large book of business. I have a whole team, and just really was able to find my way through that path. And I became a passive investor through the group, through our proprietary investments. And now, 20 years later, I've retired from the industry, and I kind of achieved what we were looking for, which is building out our own personal portfolio or family portfolio. And I kind of look over and oversee that. My wife is a licensed stockbroker, so she's a pro still. So she does that side of the business. And on the side, what I do is I give back to the community by training and mentoring people or coaching people one on one. So that's kind of my full arc.
Nice. So I have a couple of questions I want to ask about that. First, what kind of art did you do? What kind of artist are you?
So was in theater, and I through high school I was both backstage and on stage. So I was studying both sides of it. And when I went to university, I actually went to the top theater school in Canada. It was called Ryerson. It's in downtown Toronto. It is
Mhm.
the most urban university in all of Canada. Like, the downtown Toronto is its campus. It's kind of like the
Yeah.
Canadian Juilliard. And I studied technical production. So I worked on as a technical director and learning how to become a producer. And how I ended up making that transition is that the company I was working for was a publicly traded company at the time. It ended up going under. And I realized that if I became an executive producer instead of just a regular producer, an EP goes and raises capital. So I realized, if I raise the capital, you can control the whole production because you're the big boss,
Mhm.
right? So I wanted to go to the finance, and essentially what we call Bay Street is our Wall Street, go to Bay Street to learn how to do that. And at the same time, learn about my own personal investments. So it's like kind of 1-2. And I did that, and I studied it while I was on base. So I was in an army base studying all this material, trying to figure out my next move to become an executive producer and learning how to raise capital. And I just went in and I started raising capital for real estate, and it just became a 10-year career. I couldn't go back to theater.
Yeah, it's interesting how those skills from our previous lives seem like they're not really going to apply to what we're doing right now. But when we look at it and you think, oh, like all the stuff that you learned from that experience directly applies to what you're doing. I remember I used to live in the Czech Republic teaching English, and my friend that I was living there with, her uncle had an Academy Award for a best foreign film from a couple of years before. And so we went out to go meet him. I was super excited. And he was the executive producer. And I said, well, what exactly does an executive producer do? He's like, we raise the money. I was like, oh man, like that's not filmmaking. And so even way back then when I was in college, my feelings about raising capital and raising money were already kind of poisoned, feeling like, oh, this isn't really something that I would want to spend the rest of my life doing. But as I've kind of come into my adult investing life, I realized that raising capital is the most valuable skill that there is. And it's what I was already doing anyway, with any marketing, with any type of networking. It's all about talking to people and seeing how you're going to get projects done. And without somebody raising the capital, nothing is happening. So, how do you find that that skill translated? Obviously, that one directly translates over to what you're doing now. But
Oh,
what other kinds of skills did you learn from that background that have helped you with what you're doing today?
well, 100%. Like, the way that I see it, being the executive producer, really what you've got to do is you've got to sell the production. You've got to sell the story of why this story needs to be told and why this story is important. And it's more than, or it's an advanced level of trying, like any kind of trailer out there is trying to sell a movie. And in a very short span, 30 seconds, a minute, they're trying to explain why you need to go see the show, and they're trying to sell a ticket. An executive producer is that time, like 10x, because they have to go in and sell the whole production of why this production needs to be made, and they have to get hundreds if not millions of dollars. And so it try to sell $1 million ticket to say that this story needs to be told, right? And then try to add in all the other components of it, where the investment side of it is like, well, it's a very high probability that we're going to get a return, and all the it's very, very transferable. And when you go that and you just replace the movie with a whatever investment, you've got to make a case for why this particular investment, why this company, why this stock, why this real estate production, or why this real estate syndication, whatever you're selling. You've got to make a very strong case of why that person needs to write a check or should write a check to be able to get them.
Mhm.
There's many different answers. It's not necessarily just because it's a high investment return. There's all these, it really depends on who your client avatar is or who your prospect is.
Now, on this show, we're really powered by commercial real estate. We spend a lot of time talking about that. But what I've noticed with people I'm talking to, the most wealthy people I know are always in both real estate and the stock market. And I feel like there's a lot of squabbling, especially online, about how, oh, you don't want to be in the stock market and look at these bad returns you're getting. Come over to the real estate side of things. It's almost like we're inviting them to the dark side. But I really find that a balance of being in the stock market and then washing those capital gains through the tax benefits of real estate is what most really wealthy people are doing. So with your wife's background as a stockbroker and your financial background, can you kind of shed some light on the relationship that you have between making passive income through a diversified portfolio rather than just trying to be a maxi in one area?
Yeah, I'm really glad that you asked that question. So I'm also a licensed stockbroker. I was a licensed stockbroker. Plus, I also had a life insurance license as well. So I'm multidisciplined.
Mm.
From my perspective, the way that I see it is, and I agree, I see this all the time where people are saying it's all or nothing. And that's not really the answer. What I subscribe to is something called modern portfolio theory. And when you become a licensed stockbroker, one of the things they teach you in wealth management and wealth management training is that somebody's portfolio return is less about what they own and more about how much of what they own. So experienced wealth managers focus more on what we call asset allocation as opposed to
Mhm.
what to invest in. So when I'm managing somebody's large portfolio, I'm looking at how much of, like, if a whole portfolio is 100%, what percentages do we allocate to certain asset classes, including alternative asset classes like real estate? How much are we allocating to crypto, right? So for an example, I can't stand crypto, right? But if a client insists on doing that, sure, I can see that we can make a place for it, but it's all
Mhm.
about how much. And I can tell you, for me, my answer in an asset allocation is a single digit percentage for things like crypto. Those are more
Okay.
speculative, of what we call speculative investments. And in wealth management, we have
Gambling.
this, like, this pyramid, and they say, well, there's got to be a lot of the base, so a lot of
Mhm.
cash equivalents, or sometimes, right? So you're doing maybe a 7 to 10% in cash or cash equivalents. Then you look at your fixed income. Then you take a look at your stocks, so your equities, and then your alternative asset classes. And they all have a piece and a function, which is all
Mhm.
dependent upon the client and what life cycle they're in and what they're looking for and what they want as a return. So those are all
Mhm.
dependent upon what percentages that you allocate.
Now, I have a buddy of mine, he manages a large mutual fund, and we were talking about the basket that they have in there. And he said something that really struck me as really stuck with me. They only had something like 7 to 10 stocks in their fund at any given time. And I said, well, isn't that kind of going against the rules of diversification? And he said, diversification breeds mediocrity because you're playing the
Yeah.
average of the market. So, what are your thoughts on that? Not just with stocks, but even with real estate. It's like we talk about diversification for risk management, but it does kind of play the average and tend to be on the more mediocre side on the return. So how do you balance those 2 things?
That's another great question. I'm also really glad that you asked that. A lot of licensed professionals, what they do is, when we focus in on the asset allocation, the next layer below that is you've got to take a look at that vertical. So you're talking about equities. So when you take a look
Mhm.
at the equity vertical and you go in there, really, one person can't really focus in on more than somewhere between 10 to 15 assets, or 10 to 15 companies, because you have to read the annual reports. And in the license
Mhm.
world, there's something called know your product. So you can't make a recommendation unless you know that product very well. And you're strapped. You got so many other responsibilities that you got to do. Plus, you got to keep up with. You can't look at 10 different or 100 different stocks or 100 different companies and look at their annual report and their quarterly returns and whatever kind of, latest thing that's going on. There's just way too much to stay on top of. So yes, I would agree. And In the equity side, there's a strategy called core and explore. And what core and explore means, you look at maybe about 5 to 10 stocks that you watch religiously and you know their history and you're up to date on what's going on. And then you have a large portion of things on a in a core, which would be like indexes, for an example. So you go and buy index funds that just manages the overall portfolio. So you're buying the overall Dow Jones or the overall FTSE or
Mhm.
whatever exchange, and you have a nice kind of balance. So there's another asset allocation within that. So how much do we allocate towards domestic, like Nasdaq and Dow Jones? How much do we put in the Nikkei, or how much do we put in Japan? How much do we put in Germany? How much do we put in Canada? And those are all smaller percentages. And then
Mhm.
within there, maybe you dig down even deeper and say, well, this client is really hot to trot on technology, so we're going to buy a little bit of the Google or a little bit of Alphabet, and then mix those in. But you've got to know those assets very well. Right. And that's why you'll
Mhm.
have certain stockbrokers or certain managers that will insist on certain asset class. And if a client comes in and says, "Hey, I want to get this weird sort of stock," they may turn it down because they cannot spend the time to look at it, and they don't want to make that kind of recommendation.
Okay. Okay, and then so I had that happen to me once. I was working with a financial advisor for a little while, and I made an investment in a sports team, like a startup sports team, and he said, "Why are you doing this?" And I said, "Because I want to. Because I have the money and I like the company and I want to. And I don't know if it's gonna make a return, but I wanna support this company. I wanna support this industry." And he was like, "I can't even talk about that. I haven't seen their documents, their
Yeah.
financials. I would just advise you against doing it." But he understood that there are some things that we wanna do just because we believe in the project or we believe in the business, and it's not about the return, and so that was an eye opener for me about what my financial advisor could actually advise me to do or against, and his main thing was that he just didn't know anything about it.
So I used to have agreement. I get inquiries like that I got inquiries like that all the
Mhm.
time. And if that's the case, the way that a good money manager will do that is we'll just mark that trade as unsolicited. So it
Mm,
releases us from fiduciary responsibility. Say that,
okay.
"Hey, this is against my recommendation. This is up on you. If you want to invest in it, by all means." And I used to have a handshake agreement with some of my clients. Is like, you know what, I disagree with this. I don't know it. So if you want to do it, by all means. But there's some stocks that I completely disagreed with, and I said, I'm going
Yeah.
to mark unsolicited in this. And then a client's like wife, for an example, also disagreed. So I would make an agreement and say, "Hey, let's allocate a certain percentage of your total portfolio to this particular asset. Call it like 2% of your overall portfolio. And
Mhm.
if at the end of the year, we'll revisit it. And if that 2% increases, let's take the return and bring it back down to 2% to keep it in balance. If that 2% ever goes down to zero, you're done and you can't buy anymore. It just proves my
Got it.
point that you shouldn't have been in that."
Yeah.
And he's like, "Okay, that's a great agreement." And we just make that sort of gentleman's agreement and just kind of sign it, and then we move on, right? And then, but at least you've contained it, and that's kind of what you do
Mhm.
in a stock portfolio like that. I think another interesting point that I wanted to bring up is this style of money management and my style of money management, because there's many different styles, right? I think the two biggest ones you would get into is quantitative analysis, which my wife
Mhm.
and her advisor they manage, and they're very quant based. And then there's my style, which is value investing, and hence why I'm the
Mhm.
big real estate syndication guy. Value
Okay.
investing is buying assets that are underappreciated, like value adds,
Yeah.
that type of stuff. But you can do the same thing when it comes to public stocks and fixed income. I think
Mhm.
my justification for that is my style of management is very similar to a large pension plan. So if you take a look at large pension plans and across America, they will show you parts of their asset allocation. Some of them will even dictate their entire asset allocation, and it'll usually be a range. Like CalPERS, for an example, California Public Employees, they'll say that we're allocating somewhere between 12 to 15%
Mhm.
in private equity, and another, like I think it was another 12 to 15% in real estate assets or real assets. So
Mhm.
a total of 30%, right? So that gives you an example or justification to say, to answer your question, should it be all or nothing? It's like, well, look at the large pension plans, look at the institutional players. What do they do? So even then,
Mhm.
they won't have more than 30% in real assets and or private equity. The rest of it's going to be in different asset classes, and it's very similar. You just have a pared down, simplified, or more of a simple version of what large pension plans are doing, and then just implement
Mhm.
that in individual people's portfolios.
Well, so how does this translate over to commercial real estate? Because I have way more than 30% in commercial real estate because I feel like I get it. It makes a lot of sense to me and I can really specialize in something. And so I think that puts my portfolio out of balance towards that direction. So as you're learning about the asset allocation, I talk about this a lot about diversification, but I feel like there's a lot of diversification to be done in commercial real estate. Am I doing multifamily? I'm going to do new. Am I going to do value add? Am I going to do storage? Am I going to do warehouse? I mean, there's so many options, and most real estate is commercial real estate. And so I feel like the diversification there is great. So, how do you allocate into something when you have some specialized knowledge in that area and you're really interested in it? You're going to do the research and follow up. Like, I don't want to research companies on the stock market. I've tried that for 20 years. It didn't work. It's just not my thing. So I kind of keep a small amount over there just in index types of things because it's set it and forget it. But with real estate, I really feel like I can be more of an active manager and I might even be able to beat the average, which I don't feel like I can do in the stock market. So, what does that look like for you who you are an expert both in stocks and real estate? Is that even possible to be an expert in both of those things? You gotta tell us more about that.
It can be, and really what I explain to people is that because I've had some clients that if you take a look at their entire net worth, their
Mhm.
house, their personal house or their business represented a significant component of that,
Yes.
and it overshadowed their investment account. And
Mhm.
I had clients where I said like, "Hey, if you go and I tried to get them up to a 30% percentage into alternative asset classes like real estate,
Mhm.
and they would explain, well, if I take this $100,000 check or $250,000 check and reinvested it back into my company, I could get a multiple return versus what I
Yes.
would get as a passive investor." So I explained to
Yes.
people is that's absolutely correct. So I and what I would tell people is I can't beat you in terms of investment return. Whatever you focus your time and effort on, historically that is going to give you the highest return. So if you start a
Mhm.
business and sure, like businesses fail, but if you, I would classify what you're talking about as you're talking about active management of real estate, general partner, like being a GP. That's more like a business as opposed to
Yes.
passive investing. So one
Mhm.
can argue that you can subtract that from the asset allocation because you're actively watching it. You're taking the effort to become an expert in that area so that you can go and increase your exposure to that, and it's all on you. Now
Mhm.
you have to recognize you're increasing your risk, but at the same time you're also
Yes.
increasing your knowledge, so you're doing it yourself, so that's a little bit
Mhm.
different. And whatever you focus that attention on, I think there's a sweet spot. And when we come to diversification is you can go to either extreme. Diversification is
Yeah.
not two assets. Diversification is also not 36 different assets in 36, all in commercial real estate, but 36 different types of commercial real estate because you can't keep up on all of them, right? One person.
Correct.
So large institutional players can watch 32 different commercial real estate verticals, but they will have 36 to 60 employees, and each one of them becomes a specialist in that area. Right. So you really got to take on where's my niche and how much is too much and how much is not enough. And where do I find that balance for one person to watch?
That's a really good way to look at it because I realize that's what I tend to do. Like I want a certain percentage allocated to my business that I'm actively managing, and I want a certain percentage allocated to passive investments that other people are managing, mostly because they're better at it than I am. And I try to put my passive investments into sectors that I'm actually not an expert at because I feel like if I am going to invest in something like that, I want to increase my returns by investing in my own project. And so yeah, that's a good way of looking at it, separating the business from the investing. I think that's a problem that a lot of investors have that are running a real estate business. They're rental business or wholesalers or flippers or whatever it is. And they say they're real estate investors. I'm like, no, you're a real estate entrepreneur. There's a big difference
Yeah.
between working in real estate and investing in real estate. So I like that. I like that analogy. Just kind of think about my business as a separate entity than my passive portfolio.
Yeah, and you do the same thing with like a stock portfolio. So you take a look at a stock portfolio or a fixed income
Mhm.
portfolio, and then you just take a look at overall very high level percentages. How much do we want to have of our stock portfolio invested in domestic assets or domestic
Mhm.
stocks? And then in that domestic stocks, then you go, how much do we want to have in the S&P? How much do we want to have in NASDAQ? How much do we want to have in the Dow? And then maybe just leave it there if nobody's watching it. But then if my wife, for an example, like we'll go and sit down and we'll say, well, let's allocate this amount. And then if she says, well, I'm going to go take this Dow stuff and I'm going to now start picking individual stocks like I'm going to watch. Well, that's different. But if you
Mhm.
don't have the time because you're focusing in on alternative real estates, that just stay there. And I wouldn't go any kind of
One second.
more detailed than that. Yeah, and I think a big part of that is digging down and how far do you want to dig and recognize that if you specialize in something and really give it some focus, you might be able there's a higher probability you're going to squeak out a larger return or a better return. The
Mhm.
downside of that is that it requires your active attention. So how far
Yeah.
can you stretch yourself? And if you stretch yourself too far, it starts to become diminishing returns because now you're stretched too thin. So it's a balance between figuring things out. And there's only so far that you can go. Once again, these are all playbooks that you would find from institutional investors, right? So they would go and they would have specialists in every single different vertical. It's what the vertical you
Mhm.
want to choose. And then can you do the other ones that you're not watching? Can you put them into a passive sort of strategy that's just, buy and forget?
Mhm. But I also have found that as I am getting more and more, because we're kind of retired at this point, and I'm slowing down. I want to do some philanthropy and some other things like that, and I just don't want to really have as active as a hand, an act. How do I say that? As active as a hand on my business as I used to be much more entrepreneurial, and now I'm kind of shifting more over to the investor side of things, where I want my money working. I don't want to be working, and I've noticed I've started putting more passive investments into things that I am better at, because I just don't want to run it anymore. And so I think
Yeah.
making that transition, once you get out of the rat race, I've been really careful about not just getting into another rat race. And if I do
Right.
start, which we have started another business with our private fund, but I'm being very, very intentional about not letting it take over my life, because my husband's now in the business with me. It could take over our lives, and we're having to be careful that we don't get to that point. So how have you managed that as you've kind of transitioned out, like you said, like leaving that position, and what are you working on right now? And how are you keeping that balance and avoiding?
Yeah, and I'm glad that you mentioned like philanthropy and what's the next stage beyond this. And it really starts with the foundation that I learned about asset allocation, which is all about boundaries and setting your
Mhm.
boundaries. So the interesting thing that now you're talking about, it's kind of like setting asset allocation of your time. So, do I
Mm.
believe in philanthropy? Absolutely. Do I believe in, staying active and challenging yourself and trying new things? Absolutely. But don't let them consume you. Don't let that get
Mhm.
up to like 80 to 90% of your life or more, right? Because philanthropy is, and I'm a big advocate of philanthropy, especially for people that are semi-retired or getting towards the end of their life cycle or of their wealth life cycle. But it doesn't mean
Mhm.
that a philanthropy should take over 60 to 80% of your life. It's tithing of not only or your income, but also tithing of your time and give back some of
Mhm.
your time. And that's where kind of I draw that line, right? And say, well, give back some of your time, but not all of it. And just be careful and be very intentional of watching how much you're doing. So for me, I'm kind of at the phase now where I'm doing a little bit of that. I do because one of the things I recognize that I'm based on my experience, I realize like I'm talking to some charities that the experience that I have and the knowledge that I have to coach them on how to talk to high net worth investors for donor dollars is worth more than
Mhm.
writing them a check of 10% of whatever I make, right? Because they can get that from anybody. But if they go and they engage a person like me, which is pretty rare to find a salesperson or somebody who got 20 years experience talking to high net worth and family offices, my
Yeah.
experience or my time in kind is worth more for them because I can show them how to talk to those people. So I started tithing of my time in addition to that. But once again, there's a very, very solid wall for that. I'm very careful about and intentional with that. Same thing with my practice. So now that I've left almost, I don't manage money anymore. I took all my licenses down. And one of the things I wanted to do is to stay sharp and to stay active is really to coach people. But at the same time,
Mhm.
how far do I want to go? And I don't want to get to like a Tony Robbins where I have this huge program and speaking things. And I want to do some of it, but not for the all consuming of my life. Like you said, I'm like semi retired. I want to make sure that I'm spending time with my kids, all these types of things, and how to make sure that it doesn't bleed too far and keep it very intentional. So my intent is really to keep my roster relatively small. It in that way I can ensure the quality of the coaching. I don't ever intend to
Okay.
hire other coaches to teach my program like a Dale Carnegie. I don't want and plan on
Mhm.
making a university or having this massive kind of speaking tour or all these types of things. I just want to keep it relatively small and because I'm pretty happy with like how much more do I need, right? And
Yeah.
if I take less, I can give more in the world. And that's what one of the things I believe in. But I'm just doing it to challenge myself, to always push myself, to stay current. So, and that's one of the things that I like doing. I encourage people is try something or continue to grow. And growth is found in discomfort or doing something that's new
Mhm.
for you, but not to the point
Mhm.
where your hair is on fire and everything. You're adding so much stress to your life. Keep that in balance and stretch yourself, but not overextend yourself.
It's like a lot of the entrepreneur friends that I know, where they do some sort of a startup, and they are on fire. They are passionate about this. It's like they're giving birth to this idea, and it can consume them, but they're happily consumed by it. And so your notion, I've never thought about tithing my time before, which is If I looked it up, I'm probably sure that lots of people have talked about this before, but that's actually a really great point because I do sometimes feel guilty because I have a large family. I sometimes even feel guilty that I made the decision to have so many kids because they take a lot of my time and it leaves less time left over for things like serving others. And I feel a little bit stuck sometimes because I'm also an introvert and I need a lot of time alone. And so the asset allocation of my time, that's profound. And I only tithe 10% of my income, and I shouldn't be feeling like I should be tithing 90% of my time. Yeah, that's gonna give me some stuff to think about for a while. Thank you for sharing that. And you need enough time to serve people. You need enough time for your kids, your family, and enough time left over to feed the bears, so to speak. Because those are the things that we do that are just fun and just interesting and just make life really worth living. And that's the gift I want to give to other people that I'm serving is so that they can think about their money and their time in that section, in that type of preparedness and using, I don't even know what I'm trying to say. This is all just coming out of me, just what you said there. I want to give that lifestyle that I've gotten to design others the opportunity to design their lifestyle the way that they want it. It's going to look different than what I'm doing, but I just want them to be able to have that opportunity. I feel very passionate about giving other people what we found in lifestyle design.
Right. And I think that when we get to family office management, one of the things that are very important is asset allocation of time. And the
Mhm.
reason why is that it starts to create guilt free living, especially when you're starting to deal with the charitable space. Okay. So, what you described, if you're not intentional about it, every charity has a very, very valid cause. And
Mhm.
and the more you get involved, the more you realize it. And it'll never stop. And it is some of the times it's very, very tragic. And you will feel guilty to say no and to set a boundary
Mhm.
because the demand is always going to be there. They could suck all of your time. And if you're willing to give a little, and what I've discovered, this is one of the reasons why people are reluctant or scared to go and contribute because it's such a huge cause and it's never going to stop. And look at all the
Mhm.
look at all the people that are underprivileged, or you go to like Doctors Without Borders. Look at all, there's a lineup of sick people. How can you possibly say no to that? And there's got to be a little bit of preservation to say that, well, I'm going to tithe, I'm going to give you up to 10% of my time, but that's all I can give, and it's better than
Mhm.
nothing. Right, just like of our money, and you don't feel guilty about it because you've got a business to run, you've got family, you've got other obligations. And when we get to
Mhm.
10%, I think 10% is very fair in both in your assets and in your income as well as your time. And you can, so if you
Mhm.
want to go and donate to a faith-based organization like a church, for an example, sure, I can bake some cookies or I can provide the bake. I'm not going to organize and run the whole thing because nobody else is doing it. Or I'm going to run Sunday school, but I'm not going to become the, like, I'll do teacher one or two classes, but I'm not going to become the Sunday school principal. And I have to go and, because they, if you give a, that's what people say. It's like, oh, if you give an inch, they'll take a mile. And that's very
Mhm.
true in charities. You got to be very intentional about it, very know where your boundaries are and be
Mhm.
very, very firm at articulating them.
Well, a lot of people who are chasing FIRE, financial independence, retire early, they get to the retire early part and spend like a year depressed because they're a
Yes.
little bit lost on what comes next and all that. So, I want to shift gears a little bit, basically, what you're saying about setting those boundaries and understanding what a reasonable picture of a retired lifestyle looks like so that I can start thinking about it, our listener can start thinking about it before we get there so we don't waste that year being depressed, like, "This isn't what I was expecting." So tell us about, well, kinda take us from what you're working on right now with your consulting and where you're going in the future, because I think it's really important to talk about not getting locked into a job, but also not losing the sense of purpose where you retire and you just don't know where to go and you have the last year of depression. Can kind of coach the listener and me, because I get to benefit from asking the question, what that looks like, what that transition looks like from semi-retirement to full retirement to working because you want to, just so we know kind of what to expect and can make the most of our time.
Yeah, absolutely. It's a bit of a misnomer, and once again, this is a very important part when you get to a wealthy family where they've got enough, like the family office has enough in the trust to supply the entire family. They don't have to do anything, and then
Mhm.
all of a sudden they end up with substance abuse. And why does that happen? And
Yeah.
it's a bit of psychology. What ends up happening is that the human mind is only thriving when it's challenged. And it's
Mhm.
constantly developing, which is a little counterintuitive. But really, what it means is that people have to get comfortable with being uncomfortable, which is going and stretching and learning something new or doing something new. And take a look at a purpose. What is your purpose now? Now that you've gotten financially free, now what are you going to do with that? And some people have gone and said, well, you know what? Now I'm going to decide, now that I'm financially free, I'm going to do more than tithing of my time. I'm going to do up to 80 to 90% dealing with the philanthropy. And that's great. And that's like Bill and
Mhm.
Melinda Gates Foundation, right? So
Mhm.
I've made more than enough money than I'll ever need in my lifetime. Great. Now pick something new that's going to challenge you. And whether it's going and trying to figure out how to get water in Africa or do something kind of philanthropic and do something that stretches you. So for me, part of what I've done is that I've taken a look at what do I have that is valuable to other people in the world. So and it will keep me sharp and stay active. So I don't work in an office building, and I used to work in a brokerage. It was very fast paced and exciting, all these types of things, and coming up with new challenges and solutions. And that really stretches the mind. And I love that. And if you don't, your mind will atrophy. And I don't want to sit in a rocking chair and then I'll be bored. And I'll be end up, within 2 weeks, I'll be talking to the squirrels, right? So one of the things to do is what I do is I tithe some of my time and including pro bono. A lot of my clients, when I was managing money,
Mhm.
were lawyers, and lawyers are required to pro bono some of their time. So I've taken that model, and sometimes I pro bono some of my coaching, and I'll go out and I'll
Mhm.
coach somebody. And it's up to me to decide who I want to coach or not. If I like it, it's like, sure, a lot of my clients are paying clients, like maybe, 90%
Mhm.
of it, but I want to tithe some of that and give a little bit of it back. Since the
Mhm.
beginning of the pandemic, for an example, and I set the criteria. But at the beginning of the pandemic, I started with, or I came across this website called Micro Mentor. I don't know if it's still around, but I started engaging with some people that would never be able to afford my coaching program. And the only caveat is that I wanted to coach somebody that was completely out of finance to see if I could teach them things, a concept that I've learned, and it would be applicable in a different vertical. So I ended up
Mhm.
starting to coach an artist in Hawaii, because I wanted to make some contacts in Hawaii too. I didn't want to, like, I love
Yeah.
Hawaii. And, well, I'd love to meet some people. So I was like, that's a great. So I started to coach her, and she just took to everything that I was saying. And then I would say that in the years that I've been coaching her, she doubled the size of her operation, like her shop. She's tripled her income. And it's like, you know what? It works. It still works as long as they do the work. And it keeps me, it's because she'll come and she'll call me with different challenges and problems, and it keeps me sharp to try to figure out an answer and solution. But
Mhm.
there's very little distress because I'm not her boss and I don't have equity involvement in that organization. I just give her some tips and advice, and what she gives me back in return is to strengthen my mind to come up with problem solving, and it keeps me active. And
Mhm.
I do the same thing in this community with real estate syndications. Some people that know me know that I love to donate some of my time for people just to try to answer some of the questions. And it's twofold. One
Mhm.
is it keeps me sharp. It's part of my quote unquote philanthropy. But I also remember when I first started out and I had my nose pressed up against the window, and I talked to these people that just starting out, and I remember being like that. And I don't mind giving back.
Yeah. I noticed you do spend a lot of time with us on our virtual meetups. You are usually at the after party with us, and sometimes when I'm doing something like that and I'm like, I really need to go do something else. I need to go build my business because we're definitely still building. Our lifestyle is nowhere near where we want it to be or where it needs to be. And so I still feel sometimes stuck in the hustle a little bit because of that. But there are times that I'm just hanging out on a virtual meeting and hanging out afterwards and networking or listening or even teaching. And I think, well, I'm doing this because I think it's fun. I'm enjoying being here and I can. And that's been a huge shift from having to have every minute scheduled because my kids are no longer little, my business is no longer full time, and just doing something because it's just fun to teach or learn from other people. And I noticed that you seem to really enjoy doing that. And I don't notice you checking your clock saying, oh, well, I have 10% of my time to tithe to hanging out with these people afterwards, or and I don't feel like you're drumming up business either. It's just this sense of giving because you just like what you're doing.
Yeah, and I get a lot of that because I think really what I'm looking for, what I recognize is that just, and it comes from a Zig Ziglar line that was really impactful in my career. And the line is, you can have everything you want in life if you help just enough other people get what they want in life. Journey just to go and hear what other people are looking for. And then after you discover that, it's like, well, you know what? I know a little bit about that. So when I go to a room where everybody's like, I want to learn how to capital raise. I don't know how to. It's like, well, I got 20 years experience at a capital raise. What do you want to know? And I just help them out. And it's like, why not? Why wouldn't you? And what I really love about that is that especially in this community, the amount of gratitude you get back in return, it just floats my boat. I just love it, and it gets me excited, and I really like the fact that I'm helping people. Some people I've never met in person, but there's people across
Mhm.
America that I've just gone and hey, if you need this, is like I've got a chest full of gold here, and you want some? It's like, sure, I'll give you a couple of coins, no big deal. It's like, here you go.
Can you speak to maybe the investor who's listening, maybe the passive investor who's listening? Because we talk a lot about raising capital. And I know I struggle with feeling like it's sales, like I'm trying to sell something to somebody that may or may not want it. And I think, well, I'm providing opportunities that when I first found out about them, I was very angry that these had been hidden from me, that the rules were such that people couldn't even tell normal people about this stuff. And I was angry and I was so grateful that there were people out there talking about this so that I could learn from it and 5x my net worth in 5 years. And so I feel like, from one standpoint, I definitely believe that because that's my story. But on the other standpoint, I go out and I try and tell other people about it. We're running a fund or whatever. And I feel like I'm a salesman. And so, can you talk to the passive investor who is listening, who doesn't want to be sold on these types of investments and they want to find opportunities and all of that, but they're just feeling like there's a lot of salesmanship out there?
Yeah, and once again, I'm really glad that you asked that question. And one of the big things that I teach my clients is that there's a big difference between financial services sales and money management.
Hmm.
And the biggest thing is it really changes the center of what you're focused in on. If you're focused in on the investment and selling the investment or telling people to buy that investment, it will feel like sales. And a lot of people
Hmm.
make it feel like it's icky and then you're trying to force this down people's throat. Real money management, and if you want to get to higher and higher net worth clients, it switches and it comes into becoming incredibly empathetic, which is a very high level of service, which is anticipating other people's needs. And that really aligns
Hmm.
with my personal faith belief, is to be a servant. It's like servant leadership. Can I uncover what your worries are? Can I uncover what you want to do? Where do you want to go? And the more empathetic I can become, and the more I can understand what it feels like to be you and where you want to go, and then be able to show you options that will possibly help, or recommendations that I have. Well, based on where you are right now, where you want to go, why you want to go there, these are some of the options I think that I would let you consider. It doesn't feel like sales because you become a person of value and you're starting to give recommendations as opposed to selling. And the biggest phase that is missed is the beginning phase, which is the consult part. Consult, and the analogy that I use and I teach some of my clients is it's the different. Like, imagine if I was a doctor and you came into me and before, and like you wait, like I'm 10 minutes late, you show up, and then I barge into the room and it's like, Emma, I gotta ask you a question. And before you ever say anything, it's like, I gotta ask you a question. You ever feel pain? I was like, yeah, of course I feel pain. Everybody feels pain. Great. Here's this prescription for pain medication. Take this. It'll get rid of your pain. Nice seeing you. Say hi to your husband and let me know how it goes. And I kick you out of the room. It's like, that guy's a jerk. That's sales. Okay. That is transactional and it is not relational. But a really good doctor is one that shows up on time. I've read your entire history. I'm refreshed on your history. And it's like, hey, how was this? How did this happen? How did this turn out? It's like, what are you feeling? What are you here in here for today? What else can I do? And then you tell me and I take the time to listen, consult, listen to what your
Hmm.
ailments are. And then based on what your ailments are, I take the time to diagnose. And then I come in as like, well, let's sit up on the table. Let's go and see, we'll take a look at this. And I keep asking you more and more questions. And like, okay, based on my 20 years of experience and the ailments that you currently have, I feel that these are some options of treatment. And that doesn't sound like sales. It doesn't feel like sales.
Hmm.
It feels more like consulting, and it makes a recommendation. So I think that's the step that people don't understand, or the step that people miss. And the
Hmm.
biggest difference that I've seen is that really good money management is not transactional based. Really good management is relational based. And relational based requires the skill of empathy and taking the
Hmm.
time to consult and learn about your client and know what their problems are, and then be able to articulate that back to people.
Mhm. Yeah, so if an investor is looking for somebody to invest with, they don't want doctor example number 1. Keep
Yes.
looking, because if I get a doctor like that, the first thing I do is say, "Well, better keep looking because 'cause I'm looking for somebody who's aligned with my own medical philosophy." Even though I'm not a medical professional, I know what my medical philosophy is, and I can go find a doctor who fits that. And so I know what my investing philosophy is and the kind of people that I want to work with, both when I'm investing with them and also the kind of investors that I want to work with. I mean, sometimes it gets to the point where it's like, your money is just not green enough because we just don't line up on our philosophy on investing. So keep looking. If you're out there looking for somebody to invest with and you're not having satisfactory interactions and you're not feeling listened to, heard, understood, empathized with. I mean, if you notice the word consult, it sounds a lot like console. And so you're looking for somebody who can come in and just give you that feeling that they are listening to you. And even if they can't help you, they may be able to point you in the right direction of somebody who can. And there are many of us out there doing business that way, but there are a lot of people out there who are not doing business that way. And I think it's a difficult thing to communicate. Like you're on LinkedIn and you're like, hey, DM me for this to get more information. It just feels very salesy. And it sometimes just doesn't sit right with me and it doesn't sit right with investors.
Yeah, and it goes back to like if a person comes out and is like, "Hey, I got this great real estate deal. Reach out to me and see if you to learn more." If you go back to that Zig Ziglar line, did you even take the time to care about what I'm focused in on right now? Right? Like you don't even
Mhm.
know. Like you don't even know what I'm dealing with. That's zero empathy, and that has got a very low hit ratio. But if you start
Yep.
taking the time to get to know where's and it just completely changed my sales process where I said like I would just sit down with people. It's like forget what I sell, what are you interested, what's occupying your mind right now? I can't tell you,
Mhm.
like people had the most random, some people said like, oh, I'm looking for a husband, so I can't find a husband, and that's occupying my time. So what did I do? I went out and I said like, well, I know executive matchmakers. I'll go out networking with you, and I'll be your like your sidekick and help you find people, all this stuff. And I would actually go out and do that. And one of the
Mhm.
things I learned in the insurance world, they say that sit around and when somebody has a life event, like they get married, they have a kid, any kind of life event like that, that's a great time to increase their insurance or sell them insurance. So I would sit
Mhm.
there and people would say like, well, just sit around on Facebook and wait for the to see a wedding notice and then go and try to sell them. Well, that's so icky. But if I went out, can you imagine if I met somebody and said, well, what's your biggest concern? Forget what I sell. What's your biggest concern? I want to find a husband. It's like, great. Let me go out, and you go and interview people and you help her out and you just have some fun. And next thing you know, she finds a husband or she finds, well, you're not only will you be invited, like you'll know about the wedding, you'll be invited to the wedding, and hell, you might even be in the wedding party, right? And you've got so much
Mhm.
goodwill deposited there that I say, well, thank you very much. The
Yeah.
whole reason why we're together is because you made that recommendation. How can we help you back? I was like, well, now that you're married,
Mhm.
have you ever considered using life insurance now to support or to backstop some of your financial, liabilities? And
Mhm.
that's a great time to make that offer because it's depositing that goodwill, and it's just so applicable. You don't have to do that, but I'm just saying that as a specifically, but as a representative of an investment or whatever
Mhm.
you're managing, can you really care about the things of your demographic, of your avatar or
Mhm.
ideal client? Do you really know what's important to them? And can you assist and help them with
Mhm.
that? Because when you do, that deposits goodwill, or what Stephen Covey calls emotional bank account. It starts adding into
Mhm.
that emotional bank account. And do you have enough? Because if you've just met me and you're asking me to make an investment, that's a withdrawal. And you haven't made any kind of effort to get to know
Yeah.
who I am. There's zero deposits there, and that's why there's a very low a low hit ratio on that.
Yeah, it's almost like doing something to get karma guarantees you're not gonna get the karma. So you just gotta do it because it's fun, you like people, you like helping people, and believing that the karma will come back to you, but you don't know from when, from
Mhm.
whom, where. You just know that it'll eventually come back if you just keep feeding the world. So I love that. I love that philosophy because a lot of us who are raising capital really struggle with not being genuine. I think that we have genuine want to help people, but it comes across as very ingenuine, inauthentic, and finding our voice and our style. I think that having more passive income myself and being able to not need the next investor in order to eat has really changed my approach because it doesn't really matter. I am okay with building things slowly, more organically, because we can keep the lights on without that because we have our own passive investments to support us. And it really just has changed my entire mindset about being an entrepreneur.
So I had a branch manager one time mention to me, and he said that really successful advisors are people that are really connected in a very a wealthy and established community of some kind, right? And I took a look around. My parent, my family doesn't come from privilege. I don't have a high net worth kind of community I can connect with, and I really struggled with that for a long time. And that's when I came across that Zig Ziglar line. I recognized, you know what? If you go out and you try to go and help people get what they want in life, by making great connections. And it's my responsibility to go and meet new people all the time. And I can start, you just naturally, the more people you meet, the more likely you're going to see, well, if I connect these two people, they can really help each other out. And I don't do any of the work. I'm like super lazy. Okay. So I just want to
Yeah.
connect these two people. And as a result of those two connections, they can go out and they can start doing business again. And they can become more successful. So I discovered the second best thing from being born into privilege, having being surrounded by a wealthy group of people, is to make your community around you successful as a result of
Mhm.
making connections for them and connecting people together. So it's mentioned in a book called Keith Rossi's Never Eat Alone. Can you go out and start making just genuine connections for each other? You make emotional deposits as a result, and you help other businesses become successful. And a high tide raises all boats. Next thing you know, you'll be starting to be surrounded by a community of successful people that you have all this goodwill and emotional deposit, because the reason why they're successful is because you help them out, and now you're surrounded. So the second best
Mhm.
thing to being part of or in a successful community is to make one around you.
Yeah. Oh, I that's probably why I had so many kids. I love hearing about people that I introduce that are being successful together, and I usually don't make a dime from that. I don't make referral fees, I don't get a cut of the deal. I just hear back later, "Oh, wait, you guys ended up doing a deal together?" And sometimes that's backfired on me. Sometimes I've made introductions where they did deals together and it didn't go well, and so it goes both ways, but it cuts me just as deeply when it doesn't go well as I get excited when it does go well because I just have a genuine enthusiasm for I guess teaching, helping, watching people do well. And I think that incorporating that into your business, into your investing, and demanding that from your investing relationship with the person that you're investing your money with is really a game changer. All right, let's shift gears for the last time. What you have coming up that you want us to know about, and just tell us about like one of your passive income. I hate to use the word bucket list because I feel like it just it has some connotations, but I just something that you've really always wanted to do that you still haven't done yet.
Well, there's a couple of things. I think that I've recently been asked this quite a lot. Is like, do I ever have a desire to get back into theater? And maybe I do,
Mhm,
maybe I don't. I don't know. I don't know if I can make it work. I might try it. Passive, when it comes to actual investments, specifically about passive real estate, I have to be very vague about what I'm investing because I'm a former pro. But suffice it
mhm,
to say that I've been investing in a lot, or my main love is real estate. It's done incredibly well for us, and it's very likely that I'm going to continue to focus in on that. Probably
mhm,
not very much that I haven't done, especially what I set out to do. Which I think that you asking this question now has made me realize that from when I started out to where I am now, I really achieved what I was looking to do and hoping to do, and learned what I was hoping to do. I think the biggest thing I want to do now is give back. Now I've gotten to the phase where I
mhm,
want to just give back, and that's what I'm doing. So the exciting thing that I'm really excited about, that I'm what's in my future, or what I'd like to get people's help for, is that I'm starting to broadcast again. That I'm going out and starting to resurrect my public speaking. So prior to the
mm,
pandemic, I was starting to become a public speaker. I did that for a lot of sales conferences at financial professionals, mostly for financial professionals. I got another speaking gig next month, but to do a lot of
mhm,
public speaking. And what I'm starting to do now is starting to broadcast that I'm comfortable or I'm willing to do that in the US for these different conferences, specifically focusing in on capital raising or a client
mhm,
relationship, those types of things. So very excited about that. Hopefully I would love that for that to pick up. It's a great way to travel and meet some of my clients, or meet some of the people that I've been talking to in the
mhm.
past couple of years.
Yeah, it keeps you young, keeps you fresh. And I've noticed when people say the thing that they're most afraid of or the thing that stresses them out most is public speaking. And so I feel like when I hear that, I think, well, I love public speaking. So I can really leverage that because most people, if you're good at something or you like something that most people hate, that's really what you should spend most of your life doing. And so you like it, you're good at it, and most people hate it. And so it seems like everybody and their dog is on a speaking tour, but that's only when you're in that community because you're meeting all the people who actually like it. But the vast majority of people out there hate it. And so we are so grateful when somebody else does it.
Yeah, and I love saying, and that's the reason why I'm picking that, right? Because for me, I actually feel more comfortable when I'm public speaking. It's the weirdest thing, and I've recognized, and I've been told the exact same thing, which is if you can find something that you're really good at, you really enjoy, and there's a need for it, and other people are really adverse to it. I think that public speaking is the fear of public speaking is higher than the fear of death in society. It's like, well,
Yeah.
I love doing that. I'm a bit of a show, like I love the jazz hands, and like I could get up on stage, I can do that, right? I'm a bit of a clown, so I don't mind, right? So you know what? I think that I can do this thing, and I would really enjoy it. And I get a lot of feedback from my public speaking events that people get a lot out of it.
Mhm.
So you know what? I think maybe this could be a good thing too. So I would really enjoy that. And once again, there's a limit to how much I want to do, but at the same time, it's something that I'd love to stand up.
I need to introduce you to a buddy of mine. He is just about to turn 50. He had a theater background, lived in New York City for a while, and just wasn't making enough money in that field. And so he started real estate investing, retired early, and he's like, you know what? I really want to go back to the theater and acting. And so he hosts a local TV show now and has a really interesting story. He's a similar example of when you've reached your goals, what should your new goals be, where you're going. And he just has such a fun zest for life that he's really inspiring for me to watch because he's kind of like where I'm next leveling up to the stuff that he's up to. I think you would really enjoy him. So remind me of that and I'll
Awesome.
introduce you.
Yeah, sounds
And
exciting.
this is what it's all about. It's all about networking. And so I want to make sure that the people who are listening to the show and are connecting at an emotional level with Edmund, like just reach out and get a hold of him. And because we're not just putting the show out there to be out to passive teaching or helping people passively learn. We're out there to meet each other, to develop those relationships, invest together or not. You need to find a husband, Edmund's your guy. So just reach out. So Edmund, how can people get a hold of you?
LinkedIn would be the first and my preferred method. So feel free to connect with me on LinkedIn and then send me a message. If you don't have LinkedIn, you should, but if you don't, then you can go to my website and I have a intake form there. So it's my website's just Edmund, and then you have my LinkedIn link there. You can click on that.
Perfect. Yeah, I definitely be on LinkedIn. If you're interested in investing, that's where all the people with all the deals are raising all the money. And so if you're an investor and you have some capital to place, the best way to meet people who are offering these things is to jump over on LinkedIn, especially if you are not accredited. Because if you're not accredited, you have to reach out to them because they're not allowed to advertise to unaccredited investors. And so LinkedIn is the place to be for that. We both spend a lot of time there. And I think that's probably how we met, honestly. Like we've never met in real life, but we've spent a lot of time together on LinkedIn and in virtual meetups. And so this is how the world goes around. This is how you get stuff done. So thank you so much for being with us today, Edmund. I really appreciate it. I could talk to you for hours, and maybe I should book you for another interview in a couple of months so we can talk about some more stuff because you're the real deal, the deep well of experience, information, and that generosity to give back. And I think it's really motivating for me and also for the listener that life after financial independence really can be better. And it's not because we're on a beach in Mexico drinking some kind of Mai Tai. It's because we're out there. We've moved beyond survive and thrive back to giving and serving. And that's really what it is all about having the passive income lifestyle. It's not about the adventures and the traveling and the photos and the social media. And it's just about people. So I appreciate you for sharing that perspective with us today.
It's my pleasure. Thank you very much for asking me to be here. I've really enjoyed it.
Awesome. Thank you so much. And be sure to reach out after the show. Thank you so much for joining us on today's episode with Edmund. I always get so much out of my interactions with him. We talked about it a little bit, how he comes to a lot of the networking meetings that I'm on and usually stays after. Anytime I have a question, he's there to help me. And it's not because I feel like he needs or wants something out of me. If I wanted to hire him to be a capital raising coach or I wanted to invest in one of the projects that he's working on, I'm sure he would welcome that. But at the same time, I don't feel like that's at the root of our relationship. And those are the kind of people I really like to spend time with. And that's the kind of person that I am working on becoming more like. There's something about not needing to have the income from investing or things like that help you to really get more at the people behind things and how it's changed things for me in my business and in my investing when we no longer have to worry about how we're going to keep the lights on. It's all about building, growing, and giving back and helping others. And I feel like the more people that I can help to design this passive income lifestyle to go on more adventures, both for ourselves and our families, and also to give back, it helps to amplify my efforts and multiply them out through other people. And I know that as you find your way in this lifestyle, that you will go out and then teach and help other people because that's just a natural outgrowth of what we do. First, we need to survive, then we thrive. And then when we get to the point where we're thriving, we can start serving and giving back. And the more people that we can grow into that lifestyle, the more people we're going to be able to help. And while we all like helping people who can help themselves, there's a huge component of tithing part of our time, as Edmund taught us, to be helping those who cannot help themselves. And I am really enjoying being able to grab a hold of that as we are in our retirement or semi retirement to be able to do more of the types of things that Edmund's talking about. So, thank you for joining us today. Be sure to reach out to Edmund if you were emotionally connecting with his story. He definitely wants to hear from you. And if you would like to learn more about investing with us in our fund, I know I talked about it a lot. Thank you for joining us, and I can't wait to hear about your passive income adventure.